You guys can see my screen, right?
Yes, yes.
Okay, okay, cool. So you could hear me clear. You know, the mic is clear, everything is clear. So I know that you guys are with me. All right, so we're going to be doing GBP USD. We are going to be explaining how I pick my order block, okay? Can you guys hear me? I need this to be interactive, you know, so, or you could use the chat box so I could know you guys are following up. All right?
You said do what?
I said we're going to be doing order blocks, okay? How I pick my order blocks and how, you know, I pick my zones. I just hope you guys have watched the first episode on order blocks, which I posted on the YouTube. I also sent it to the mentorship group. So I just hope you guys have followed that up, because what we're going to be doing today is based on the knowledge out of that. So you know, we've always been saying stuff like that, how to pick another block, the 50%, and the weak order block, the difference between the weak order block and the obvious order block. So I believe you guys already know what that means. If you don't, I'm going to send a link to the YouTube video so you guys could also watch it out. Okay. All right. So now this is how I do pick my order blocks. Most of the times I start from the monthly when I'm analyzing. You guys already understand that you have to understand that the weak order block it's more preferable than the obvious order block. All right, the obvious order block is always a trap. You know, for me, it's always a trap. I prefer the order block in the week than the order block that is obvious. Okay, so right now we see the monthly price is on a downtrend and it's retracing, failed to clear out this high. So clearly, you see price is on a downtrend, right? And we're expecting price to take out this low since you know it's a weak low. Okay, and if price doesn't take that out, we're expecting price to take out this internal low. All right, you guys already know what internal range liquidity means, right? Anyone with me?
Somewhat. I'm still getting the hang of it, but I kind of got it.
All right, cool. It's also in one of the pinned videos of the group. So if you're having problems with that, you could go watch it over again and see what you find. Okay. So now we know this is internal range liquidity, right? And we see this low was cleared out. So price cleared out this liquidity right here, right? And now this is an internal range liquidity because this was the obvious low that cleared out this high. Obviously, it was this low, right? So we're trading within this range from this high, from this low, sorry, to this high. All right. So now I have to understand equilibrium, premium, and discounts. This is what I do when I want to pick my order blocks. Okay. So first of all, I have to understand where is price currently in. You don't pick another block. Let's say we have a bullish order block. Or no, let's say we have price on the trend like this. And then you know it's on an uptrend and price will chase back into premium of an uptrend. You don't pick another block from premium. So this is discount, all right? This is discount, this is premium. You don't pick another block from premium, a bullish order block from premium when you know price is going to retrace into discount, all right? So you have to pick another block within the discount zone after you know price has cleared that liquidity to mitigate the order block, all right? You guys understand that, right? We've been talking about this over and over again. I'm just you know going to send this video to YouTube, so it's going to be like the episode 2 of the order block stuff like that. So others who are not in the mentorship could also get the privilege to watch and understand how I pick my order block before making my analysis. Okay, so I'm going to be doing this video in 2 sets. I'm going to be posting this set, but I won't be posting the other set because the other set I'm going to be saying some personal stuff on how I take my trades personally. All right, so I see analysis. Having the great analysis is one thing, right? Being able to trade is another thing. So the second section is going to be like a psychology section, which I would want to have with you guys, all right? So I'm going to be sharing with you guys my plans and what I plan to do for the week. So for this particular episode, it's going to be more of how to use the order block and how I pick my own order block, okay? So now you understand the price is in a range, all right? And then we're currently having discounts. And we have premium. Right? So we understand that when we look for sales when price is within premium, and look for buyers when price is within discount. And now you understand that the current range is bullish. Okay, so this is a weak high, which price just currently cleared. And then this mitigated probably a demand zone within, premium of this previous range, discount of this previous range, sorry. Now you're expecting price to retrace back down, okay, in a corrective form into premium to mitigate another block, then break structure. Remember what I told you guys, price has to clear that liquidity within discount and break structure for it to be valid, for it to be a valid setup, okay? And then you expect price to head back up. So if you want to pick another block to continue the trend, it has to be within discount of the current range, okay? So now there's a lot of confusion and some misunderstanding people do have when it comes to picking range, because you don't know which range you're supposed to follow. And the weekly, is it the weekly, the daily, or the 4-hour range, or which range is less important to you, which high is stronger, which high is less important, and stuff like that. You guys having that challenges too, or you're all good with it? So, can you guys hear me?
Yeah.
Yeah, bro, I'm hearing you.
So you guys have that challenge too, or you all good with it? Do you understand? Yes, I'm speaking about the range. Do you guys find it difficult understanding when switching from multiple time frames, or you understand
No,
which is which and stuff like that?
you pretty much just nailed it on the head with the internal range liquidity right here. Because I see the outside range is the monthly, and then whatever's going on inside of the monthly is inside internal range liquidity.
Yeah,
Right.
yeah, that's true. That's true. Definitely true. So right now, understand the price is within the internal range liquidity, but we want to see price to pull back because it took out this low, which was currently an inducement for this POI right here. All right. So currently, price mitigated the 50% of the weak order block. You could see that clearly. Remember what I told you guys about the weak order block on the episode 1. There's about the week. There's another block within. There are two other blocks within the week. One at the opening, and the other at the 50%. Most of the time, the 50% is likely to hold than the other block at the opening. Okay, so if you haven't still understand that, you could also watch the video, the first episode on YouTube. It was clearly explained in that episode. You could see clearly there was another block right here, right? And then the second other block was right here. I'm not refining it right now. I'm using the weekly. Okay, so it looks more clear to you since we came from the monthly. Okay, so now we're expecting. We know this is a week low, right? But we don't expect price to move all the way down unless the guys with the sell stops are going to be in profit. So expecting some pullback back into premium for price to sell back down. Now, which premium am I talking about? I'm not talking about the weekly premium because price hasn't cleared liquidity, hasn't break structure yet. Okay, it cleared liquidity, but the weekly hasn't broken structure yet. So we don't know if price is going to retrace back all the way to this high to clear out the internal range liquidity. Because if you want to check the current range of the weekly, this is the current range of the weekly, right? And now, just play this. And now you understand that within this range, this is liquidity, right? Okay, now the closest POI to this liquidity is just heading another block right here. Okay, so you expect price to clear out this relative equal highs, which would be on the lower time frame, and then mitigates off this other block. Okay, so we're picking this other block because of the inducement below it. All right, so this is how I pick my other blocks. It's within premium of the weekly range, right? I'm expecting price to retrace back into the premium, but not yet, because we don't know the direction which the other time frames are also saying. Remember what I said about picking the multiple time frames analysis and stuff like that. But then before that, we understand that on the weekly, we have to pick out the POIs before going to the lower time frame. Okay, so the only reason why I'm picking this other block is because it's the closest to the POI, which price is likely to clear out once it gets into premium and continue the downtrend, because you can see the momentums are really high. All right, now moving down to the daily, to the more current price. You could see clearly that the weak order block on the weekly has already mitigated at the opening. So if you want to see a reaction from this, it has to be from the 50%. Okay. Remember what I told you guys? It's on the episode 1 about how to use this weak order block and stuff. So our POI has to be within this zone. After all this internal highs has been cleared out, because the opening of the order block has been mitigated. So we have to focus on the weak order block, the second order block at the 50%. Okay. So now I'm going to show you guys, if you are doubting, I don't believe there's another block right there. I'm going to show you guys right here. Okay, let's use the forward time frame. Okay, you see that clearly there's another block right here. Okay, so we're not going to be using this because you see clearly this was a mitigation. So expect price to clear out all these highs because the fair value gap is right here. This would be our POI. Okay, so then remember what I told you guys, you don't take a trade just like that until you see a clear of liquidity and a break of structure. So till price clears structure, we're not looking to, getting in on this POI yet. That's when it comes to personal trading, what I was telling you guys. So you see how we will find this from the weekly order block. We're able to get just this zone, using the knowledge from the episode 1, how to find a weak order block. Okay, because we found a weak order block. I showed you how to pick another block just now. And then I showed you how to refine it using the knowledge from the episode 1. Okay, so then on the daily now, you understand that this should be a PY if price should trace back into this zone and you're planning to trade from this other block because of this liquidity. So now what you should understand that if this POI fails to create a lower low from the current range, which is to be trading back up, let's say price moves back up like this, and then price moves in here, and this POI fails to create a lower low, and then mitigates a zone, you should understand that they're going to clear out this high, this POI, because it's also an inducement for this hidden order block right here. So this is what you're going to do. It's just like playing ping pong. If this doesn't break and you see a break of structure, you get an entry here, you close this, and you get an entry here. This is when it comes to personal trading psychology. This is what I was going to talk to you guys about on the second section of this Zoom. Okay, but this first section is just how to pick the order block. Then I'm going to show you guys how to actually trade is another block. Okay, and probably maybe might use that as the episode 3 when I'm doing that on the YouTube, but that's personal for those who signed up for the mentorship. So if that POI fails, the other protected highs will become liquidity. Yes, exactly. If that POI fails to hold, the other highs becomes liquidity. But then there are other blocks within premium of the current range. Okay, currently these highs are liquidity, but then if this fails to hold, exactly, all this becomes liquidity. So you could wait for price to clear out this high once this high fails, okay? But it would definitely give a reaction to this because if price goes straight up above this high, or either it's going to give a range, probably a little accumulation, the Wyckoff accumulation stuff before breaking this high, or it's going to just, wage the high, drop a little bit, probably will test the zone and then go back up. But then if this high fails to hold, this high fails to hold, price is likely going to clear out all these highs to mitigate this, or probably this, the 50% of this is still open. So you don't know how to pick the right order block, or you have to use just full structure. Okay, are you guys playing with me? Are you guys understanding what I'm saying?
Yeah.
Okay, so right now we say price, if price breaks the structure, remember what I say, only if it fails to create a lower low. Okay, so if price to create, if price fails to clear out the low and respects the structure, market is currently still bullish. Okay, but until that happens, this is our current POI because there's a lot of liquidity resting right here. Okay, so we want to see an inducement being created once price gets back up. All right, so is anybody going to ask a question about this, or should I just proceed? Do you have any question about this POI? Let me just clear out all this. So, you have any question about this POI before we proceed? This is like the break of structure, okay? Price book structure here. Anyone got any question about this before we proceed? All right, so then let's keep moving. Now currently, okay, someone raise his hand, want to speak? Okay, you participants are now allowed to unmute yourself, so you could unmute yourself now and speak if you want to speak.
Okay, can you hear me now?
Yeah, well, I can hear you. I can hear you.
Okay, good evening, bro. Today.
Good evening.
I just because I noticed that most of your point of interest, they are always can do. I really want to just know. I mean, do you base your I feel it's only when you mark other blocks you actually make use of this can do. No, I really just want to know. I've watched the video about how to pick other blocks, but then I just want to know how you base your point of interest to the chart. Do you
Okay,
just,
so your question
make
is
it
how
on-
is it that whenever I want to pick another block, am I always picking an FU candle or do I just pick
yeah,
other blocks?
yeah,
Okay, so most of the time, this is what I do. These POIs, you guys know I don't trade all my analysis. I only trade a few of them, which most of the times is GU. So most of the time, you are intraday traders. I'm probably not going to hold a trade from here. I'm probably not going to hold a trade from here and plan to take profits from here. Okay, so I'm intraday trading. So what I would understand, what you have to understand is I'm going to pick out all the POIs, the possible POIs where I believe price is going to be reacting to, which has inducement below them, and expect price to FU into those zones. Like right here, we have liquidity, right? And then you guys see the inducement, right? Where's the inducement? Remember what I told you guys, inducement doesn't always have to be a trend line liquidity or a resistance, but another block could also be used as an inducement. I was planning for that to be the SPC3 when I would explain which other block is being used as an inducement and which is likely to hold. So if you were asked to point out the inducement for this hidden other block right here, which will it be?
that's the other block high.
You guys can annotate, right? You guys can annotate my screen, right? Someone could just pick out the other block, the inducement. Exactly. That's the inducement. This other block is going to be used as an inducement for this other block right here. So why smart money traders, which are also us, but dumb, they said, I just don't want to call anybody dumb, but then this other block is too obvious, okay, for you to be taking a trade from. It's just too obvious. What you're going to be using this other block for is an observation other block. It's more like going to be used as an inducement. I'm 100% sure G is going to be active for this. This is clearly going to be on a POI. I'll be watching GU form. And if eventually this POI, let's say, does something like this and breaks structure, I'm definitely holding for price to clear out this low. Okay, so now I'm expecting price to FU this candle, all right, to FU this other block into this POI. So it's not like I'm always picking an FU candle most of the time, but I prefer when price clears that liquidity before I pick my other block. Okay, so because this doesn't look like there was no POI, there was no mitigation right here. Yes, price clears at this high, good structure. You see the fair value gap right here, right? But then this other block is too obvious. Everyone is going to be looking at this. Okay, everyone is going to be looking at this. Everyone would want to, and those guys who swing trade would place probably their entry at the 50%, which is the obvious other block, and the stop loss just above this, and then continue the trend because the monthly is bearish. But then you have to understand that you just cleared out external range liquidity, which was this low, right? And also external range liquidity from this low, but then they mitigated the 50% of a monthly order block. Remember what I showed you guys on the monthly, right? Now you see it looks like an equal low, so you understand that GU is just pulling back and is likely going to continue the downtrend very soon. Now, this other block is going to get a reaction. At that, I'm 100% sure of because you could see right here, we have kind of like a resistance, okay? So it's like a trend line liquidity, sorry, a resistance liquidity resting above this. You see that here, right? Let's go to the 4-hour time frame, and try to understand that more. Okay, you see clearly that there's a resistance, where the resistance trader would be looking to take a trade from because, price broke the resistance and then went for a retest. So they were expecting to take trades once price comes back as the second resistance, right? Okay, I did Falcon, so, I'm a little bit familiar with the resistance stuff like that. They will expect something like this, then probably a little retracement back up. Then once there's a breakout, they want to take a trade from here. So this currently is liquidity. This is liquidity also. So this is an inducement for this other block, really. So price might, get to this zone, consolidate a little bit, give an entry, probably give a fake change of character from this other block, giving a clear entry for everyone to see, okay? Because there's a breakup block right here. So we're going to get a reaction from this POI because of this inducement right here. Okay, this is how I pick my order block. That's what I'm telling you guys. But then my POI would be to see an FU candle into this zone. All right, so now I expect price to return back slowly, then probably mitigate the other block here because of the inducements which will be created. This is market order flow. Okay, I'm just explaining how market, the order flow works, and then fails to create a lower low, but then looks like a break of structure from this low whenever took out the major low. All right, then price will turn back, and everybody will be looking to take a trade from here. And price range a little bit, probably Asian range, clear out the low, and in London the manipulation comes in. So probably FU everyone out. All right, probably a momentum from the news. Remember what I told you guys, the news is always an excuse. So probably do something like this, and then price will just head back down. You see, so this is what I was trying to tell you guys, that once you understand that the hidden order block is always going to be used as the main POI, while the obvious order block is going to be used as liquidity. Now, this would have a reaction if there was no inducement right here. Let's say it was just fair value gaps and stuff like that. Then I would have said the market is probably going to just bust through this order block. But then we have an inducement right here. Okay, there's a liquidity. There's a resistance liquidity resting below this, while we have another block liquidity resting above the daily hidden order block. Is that clear? Do you guys understand what I'm saying? Bro, did that answer your question? How most of the times I trade from an FU candle is because I'm observing, the POI where everyone is not. I'm observing what others are not observing, and I'm just waiting for them to take out their stop loss. And since the FU candle is what is always taking out the stop loss, it's just like you're you're waiting for an FU candle to come in for you to trade. But then the FU candle would come into a zone. It has to mitigate a zone. So we're expecting the FU candle to mitigate this zone while the price falls back down. Okay, so anyone got any other questions before we proceed? I just hope you guys are following up, right?
Sure.
Okay, so now we understand that this is the forward range, right? But then there's no break of structure yet on the forward time frame. You could see clearly the price hasn't broken structure yet, but this is the obvious POI, okay, from this. And this, give me a minute, let me just adjust something. Okay, and this right here is the weekly range, okay? So that was what I was going to show you guys on daily before your question came in. Nice question though. Now on the forward time frame, on the daily time frame, sorry, we see the current range is presented as this. Lower low, lower high, price retraced back up. The liquidity from this zone, mitigated the liquidity zone. You see what I was trying to say? This was liquidity, and this was also stack up liquidity, but price never went back up because there was an inducement right here. And probably the lower time frame would give a more explanation why price never went back up. But then this was also a resistance zone, a retail zone. Okay, so remember that I told you guys about structure. If we're watching this zone and we get the proper break of structure, the major low was cleared out, and we'll see liquidity resting below it. We're definitely going to take a trade from there. Okay, but then we know it's a low probability trade because we have an open POI just above it. So we're trading from a liquidity. So whoever took a trade from this zone was, a risky entry. I guess, wait for more and extra confirmation, which would be price clearing out the lower time frame and giving you a proper entry. Okay, so that's why it's like, we're always waiting for an FU candle. But if you look closely, you would see that there was also another block which was placed here as an inducement also. Price came into it, gave the reaction, but then slowly FU'd the other block into this zone. So this was the inducement for this POI. That was why this POI hold. Although this POI was also an inducement for this POI. Okay? So the same thing happens all over and over again. But once there's liquidity, you just have to trust and try. All right, you see this POI right here. You see there was no inducement created right here, just break of structure and a retest, and price just went back up all the way up because this was no inducement. There was no inducement right here. And remember what I don't know who said that, but very important message right there. Once there's a break of a major high, you understand that all this becomes liquidity. You see, price never looked back till it went to the extreme high and mitigated the other block, which had the inducement below. Yes, this was inducement, but then major high has been broken. So now until we see a break of structure from this high, not this high because this is, clearly liquidity, but if price does break this high, because there was a climatic sell right here, we don't expect price to return back up because, there's nothing, there's no inducement right here. But then if price should return back up, this would be our POI. So it would be to keep buying GU till we get to a potential POI. We'll keep following structure till we get to potential POI. That's why it's called intraday trading. But then, as you could see right here, this high was broken. So you'll understand that the market is bullish. You see, there was a pullback into another block for an entry. And you ride back up. They kept giving pullback, pullback kept coming. Let me just show you guys something, explaining what he said about the break of structure. Now price broke this high, okay, making all the previous highs liquidity. All right. Now, once that high was broken, what happened? Price pulled back to clear liquidity, right? Which is what GU is currently doing on the monthly time frame. Okay, mitigated another block, refined to the week. You would see you got a snipe entry, and then price returned back, and after it took out this high, it was more like a mitigation. It never took out the high officially. We're running out of time. We just have 10 minutes more, so I'm just going to use 5 minutes to explain this more, and you guys are going to ask questions while I post it to YouTube. Then we'll continue the other zone. All right. So then price mitigated this zone, but this failed to break this low. If this low, remember what I told you guys, if this low had broken this structure right here, let's say, this is the official low, right, that mitigated this other block, right? Now, this low failed to break this high, which means price was supposed to come back down, right? But then because it was a mitigation of this zone, but this zone failed to clear out this low, all right? Just came and created liquidity. So, this was also a weak low, weak high, right? The trend is particularly bullish, right? So this was all the manipulation happening right here. But if you understand the concept of structure, you understand what I told you guys about the break of structure. If price never took out this low, same thing would have happened here, because definitely there will be a POI above this right here. See, there's an empty wick right here. The only reason you should be looking to sell from this zone is if price broke structure, which price clearly did right here. You see, there was a break of structure right here. Now price broke structure and went back up. This was the inducement, this other block right here, clear. Internal range liquidity, price came back down, went back up, came back down, went back up, came back down. This mitigated the POI and took out structure. All right, took out liquidity, sorry. And we have inducements just below it. On the daily, this is daily time frame structure, I'm telling you guys here, right? And now this should be a POI. It hit another block within the week, which took out liquidity. And if you refine that, you would see clearly, once they mitigated the opening right here, the next aim was the 50% of the other block. You see? You see? So if we're at this point right now, which is practically the same thing we have right here. Okay. If we're at this point right now, and then you paid attention to the 50% because the opening was mitigated right here, you would have still gotten a very clean entry with no drawdown. So I'm trying to say. So this candle fueled everyone into the 50% right here, and then broke structure. It took out this low. You see what I'm saying? This is what I'm telling you guys about structure. You have to understand structure. You see, it took out this low, which was the official low right here. If this never took out this low, okay, then we would have closed this entry knowing that this other block has been completely mitigated. Okay, but then it broke structure, went back up, mitigated the same zone, then fell back down. It's very simple. You just have to follow structure while you're picking your other blocks so you don't make mistakes. I don't know, are you guys understanding what I'm saying? Do you have any questions? We do this over and over and over again, so it should be used to you guys because this is practically how we trade every week. Okay, so I'm just doing this like this because I'm sending it to the YouTube. That's all. So I hope you guys understood everything I just did, right?
Yeah, so I want to ask something.
Okay.
Please go to the recent chart.
Can you speak out? Your voice is kind of dimmed.
Okay. Can you please go to the recent chart?
Here.
Yeah, exactly. Okay, now my question is that how about if price goes to something like this? Um, can you see my okay, something like
No,
this?
no, no, really, I can't see you annotating.
Would that be seen as a bit of structure to continue higher?
If price comes back down, okay, you mean something like if price mitigates this one and fails to take out this low, right?
Yeah, like if this low is defended,
Well, if price
this
goes
current low
up,
now is defended.
I understand what you're saying. If price goes up, mitigates this
To break,
zone, comes back down, mitigates this zone, comes back down, mitigates this other block, goes back down, and it's coming back up, right?
but the low
Would, should we
is
still hold or
mm,
expect price to go higher? That's the question, right?
yes,
Well, what I would tell you is this: you can't hold because you understand that price failed to take out this low, which means price cleared out liquidity from within all these internal range lows. I told you guys it's the same thing over and over again. They cleared out liquidity from this low, and then price book structure here. So what you would expect is price after breaking structure right here. Let me just point that out. After price book structure here, okay, you expect price to return back because it failed to clear out this low, but instead mitigated, let's say, let me just show that. Mitigated a hidden order block right here. Okay, so now price mitigated this zone, and you understand that this failed to clear out, the low, which means this low is going to hold because there's a break of structure. But you only take this break of structure once you see liquidity because this could happen, and then price could still do this. Remember, this is like an equal low on the monthly. This is just a monthly pullback. Since you understand what the monthly is doing, this is just a pullback. We're not expecting price to go back higher because price is just retracing after clearing out a major low. So there's no reason for price to return back up, except price wants to head back up into the zone. Okay, but if that should happen, you should be cleared by the structure and what structure is doing. You would have a greater understanding on how to follow this up. So all you have to do is just watch the current price action and then trade lesser pair and understand what your current pair is doing, and everything will be fine.
okay. Why I actually asked that was because dollar
Yeah.
index itself. I said why I actually asked that was because dollar index itself is showing the intent to retrace down a bit before going up to clear the
And
3 month
we're expecting
gap.
GBP USD on the daily to retrace back up a bit. If you can see, if the dollar should be retracing back down, it means it's an extra confirmation for us because we're expecting GBP USD to move at least 500 pips back up before coming back down. So if the dollar index is just retracing, then this is also just an retracement, right?
Yeah.
So it's all the same thing. If the dollar index is mitigating the POI, a bullish POI to go back up, the same period why the GBP USD is mitigating this zone is just an extra confluence for you to understand that your POI is going to hold. Though I do look at the dollar index, but not all the time, but it's clear and understandable if you know how to use confluence trading. So I just use fundamentals and I have it on my watch list, but I hardly look at it. So now we see price is doing this, right? And this is the current range. We have just 2 minutes, so I'm just going to, say everything that it's worth saying on the public Zoom while we do the remaining on the next class. Okay.
All right.
So now we understand that this is another block, right? Remember the week order block, and we know the 50% is open. So as the week, right? Now we're expecting price to clear out this high, which price already did. So if we get a pullback, we know J is going to be bullish. Okay, price cleared out this high and it's going back up. If price doesn't mitigate a zone within here, which is on the lower time frame, clearing liquidity and going back down, and if it fails to take out this low, we know it's a retracement, it's a reversal, sorry, and we say break of structure is what's taken. But then we cannot just place our trade, which is what we're going to discuss in the second section. We cannot just place our trade right here, hoping that price will just drop back down to mitigate this. You have to see the current price action to understand what the pair is going to be doing. All right, so you follow what the pair is doing and then hope for the best. You just don't draw your markup and say, because you're supposed to wait at the 50% of the order block, you're going to set your limit here and expect price to just drop to mitigate this one and go back up. You need to see liquidity being taken out. You need to see the lower time frame, probably the 1 minute or the 5 minutes structure broken before you take your entry. Okay, so now this is the liquidity. We have just 1 minute, and this is another block. We know this is an obvious order block, so probably they're going to go back down to take in the wick. So for finding this should be our POI. Okay, and because this was where the liquidity was resting, that was cleared just at the 50% of the order block. So in the 30-minute time frame, we have less than 1 minute, so just going to summarize it here. This was the break of structure, and all this is just liquidity. All right. So we're bullish on GU, and I just hope you've understood how to pick another block when it comes to refining it from the multiple time frame, from the monthly down to the daily. And I just hope you all learned something from this section. Okay. Thanks for being here. Thanks for coming out. We'll continue in the next zone. All right.
Thank you.